Ladies and gentlemen, welcome to the London Open. What an evening. What a mad evening. I can't believe it. The market makers, I don't know, but they are showing us some love in the charts, guys. We've had some boring price action by Bitcoin over the past few days, coming into last Sunday night stream, which was hands down the best stream. I love it. I love that stream. I watched it again. I watched my own stream again. Ways on that how I can improve it. How can I still get you guys engaged with it, and what you can learn from that stream. You know, how can I bring that forward again? You know, like 2.5 hours nearly. It's a long time, but if I can just do these sort of streams once every so often, I know that people will watch it because they can then absorb it and in their own time. It's not a common thing like it used to be every day when I used to do 3-4 hour streams. Anyway, besides that, let's understand what's going on in London so that we can move forward and anticipate some more price action moving forward. So look, guys, last night they initiated the beauty of the move to the upside. Okay, happy days, Bitcoin. You initiated that follow through. They made the run to the upside. They recovered this previous point in the chart, which we were looking at previously on Sunday. You can see that they haven't really taken much ground from it. But guys, man, they were waiting for those shorts to come in. Look at that. The liquidity was there. If you watch yesterday's video in the evening that I done, Monday's update, we were having a conversation about the depth of this liquidity. At what point were they going to do it? Could they make the move from this point right here? And guess what they did? They held the psychological low and then they shifted away from the range. Welcome to trading, guys. The thing is this. The way they impulsively move price from one point to the next commits people to putting liquidity in the charts. The guys who went long from this point right here, when they saw price coming back up, they were of the belief that Bitcoin's now going to keep on moving up. And guess what? It did. Here's the pattern. Yeah? But at the same time, those guys paid the price because they didn't pay themselves. The green vector candle didn't show a follow through. Yeah? No follow through. It didn't close higher. That gave me the clue that they were looking to pull it straight back because there was no conviction. It was a stop hunt rise, drop. Now, last night's session was very interesting. Going into the London Open. Look at this. Noticed anything interesting? Stop hunt low. Rise. Seen that before? Stop hunt low. Rise. What is it that they are doing in this area that's making us believe that something is going to happen for the bigger run? What are they going to do? Yeah? The pattern so far seems to be showing that they are working the lows, but moving away. This aggressive drop down didn't take this range. This aggressive drop down came in on a lower vector candle point. The vector candle hasn't closed at the lowest point. That could be a tell. Can we come back up into this range right here? Now, guys, listen, we've got news coming out this week. If there's anything that you need to do, it's have a lot of preservation towards your capital. Don't get caught up in wild price action in the sense where, ideally, in my opinion, you're going to have to wait until the FOMC comes out. All right? Something is being set up. And if you can't see it, then boy, don't look at crypto. You go into Forex. Look at this. Forex. Dollar yen has been rising majestically to the upside. It's like they sort of understand what is going to be released in the FOMC projections. Even if the news is good, they're going to do these surprise little movements, these traps to the downside, to the upside. All right? Something is brewing. Remember, market makers been giving money to the retail trader, and they have not been paying themselves because they're just holding out. FOMC is going to come this week, ladies and gentlemen, where price action itself could actually throw off the markets, go up and down, and then we will get direction. In my opinion, I would be cautious. If you're looking at trading, only commit at least 10 to 20% of your trading capital, okay? That is a practice that I like to do if I want action. If I want to trade prior to news, I only commit about 10 to 20% of the capital. Why? I am not going to be putting up the majority of my trading capital during times when the market maker is preparing and making people believe one thing is happening when he's really setting up for something else. I want to be able to get ready so that once the news does come out, he's going to initiate his false move, and then I'm going to be ready to take advantage of it once he's manipulated all the people that are currently in trades right now. If you have made any profit on any Forex pairs, any crypto, take some profit, because this week is going to be very volatile. Okay? From now up until probably, I'd say, coming into Wednesday, okay, Wednesday night tonight, Asian session, Wednesday early hours in the morning, things might start to slow down. Okay? It might start getting a bit quiet. So if you do decide to get into any trades with Bitcoin, okay, and Bitcoin hasn't made the move until, let's say, from now until the early hours tonight, I would close your trade. Why? Because they're going to be holding the range, and you'll be sat in that range waiting for a break. You'll be waiting for it, and that break won't happen until the news gets released. So we've got Monday, we see some great activity. Tuesday, hopefully we see some more activity. Okay? Coming into Wednesday, it's going to slow down. Looking at gold, starting to drop back down lower. Happy days. They're taking profits from their positions. Great news. Okay? Now, the good thing is gold is now getting cheaper and cheaper and cheaper. All right? What point could we see price get to? Let's see. We've got the news coming out. The S&P 500, you can see what's gone on right there. They've had a relatively decent time. The S&P 500 index trading lower, but ultimately the treasury yields themselves are giving us a lot more information. Look, risk appetite is on, baby. Okay? It is on, and they are favoring higher prices. This is because of the FOMC release statement. Okay? So anyone in the news announcements, now listen, they did this last time. They released a little bit of information regarding the, here we go. Weak growth, inflation to keep, Bank of Japan, an outlier with dovish policy tone. That's Bank of Japan. Okay, so that is a prospectus to trade against the dollar and against Japanese yen and say, right, dollar's going to be rising on that instance. And we've seen that happen. Keep an eye out on the news. All right, because they're just going to drip some information. They do it all the time. They'll drip something that says, okay, this is what we expect from the FOMC statement. The projections seem like they're positive on a statement that has been released, but then it was removed. They did it last week. Yeah, they did it last week. The Treasury released a statement on their website and then they removed it. All right. So something talking about, I've forgotten what it was, but go into this part of the website here and just go back to last week. And it was something that the Treasury did. They released a statement and then they got it out. They removed it from their website. Okay. Now, okay, this video is getting a little bit long right now, so I want to just make sure I get the information that I want to get across to you. Here we go. Fed traders are almost back to fully pricing in 7 hikes. So what that means in that respect is it's saying, right, look, let me show you. Traders have boosted their expectations for the amount of Federal Reserve policy tightening that could occur this year and are close to fully pricing in 7 standard quarter point rate hikes. Okay, the last time the market for overnight index swaps linked to the Fed meetings dates fully priced that much tightening was on February 11th, the day after the US consumer price inflation numbers for January came in hotter than expected, prompting investors to wager on more hawkish central bank policy. Hawkish is a positive thing, dovish is a negative sentiment. Okay, so whenever you're waiting for news announcements to come out, guys, and they say that the tone is somewhat hawkish, that means it's sort of positive. If they're starting to come across as dovish, it means it's somewhat negative. Okay, now with that being said, ladies and gentlemen, going back into Bitcoin, what can we expect from today's ranges? Today we should see some moves. Today could be the last day that they initiate some moves prior to the development and the actual play out of the news plays of the FOMC projections and the statements about the interest rate hikes. When they say that they've priced in the hikes, they've implied that this is the result of the hikes. Okay? So they've already priced it into the chart. That's why it has moved so aggressively. So when the news play comes out, be prepared for up and down behavior, and then they'll slowly likely to drip it back down again, recover at all of these points in the chart right here, and then start the same business again in this area. Okay? Bitcoin on that basis, what will you be doing? Because whilst all of this is happening, guys, it's great that Bitcoin is holding this area. Okay? But I believe that the market maker will move Bitcoin to particular points in the chart that are going to be of interest. All right? So check this out. If we look at this chart right here, you can see last night they ate those short liquidation points. Now, given the current range for today, ladies and gentlemen, we need to understand the following. There's liquidity all over the place. Okay? People can't make sense of it, whether it's going up or down. Near-term liquidation points are present in front of us, and it's all the shorts to the upside. They've already absorbed loads of shorts. Now loads of longs are coming back in again, okay, in this area because they hit them last night or earlier on this morning. Now we're at the point in the chart where they need to start building it up again, okay? These are the 50x guys, 25x, previous zones of liquidations. They're right here. They've hit those liquidation points. $154 million worth of longs liquidated in that area in the same moment that they were opened. Sad days. Not that much liquidity coming into the chart right now. So, market maker's going to have to do something. Price is trading at the psychological low. So, let's see what they decide to do from now up until New York Open. Ladies and gentlemen, forgive me if I've been going on and on and on. Be sure in the comments to put down, I survived this time, Tino. And make sure that you pass through to today's live at 2 p.m. Okay? Mad love and respect to you. It's a 10-11 minute video. Please forgive me for that, guys. If you are new to the channel, be sure to like and subscribe and catch up with us today at 2 p.m. GMT time, which is UK London for the New York Open. Okay? Have yourselves a wonderful day, guys. I've got nothing but love for you. Take care of yourselves. Peace.